Hi, I'm Mike Allers, and today we'll be bringing you your first installment of the super secret investment that has smart investors like you sleeping at night or sleeping like a baby. So you got this email from my executive assistant Caesar, who's filming us right now, and if you received this from me, you probably received something from me in the past, either via the internet or via live seminars that I host around the country. And so we just thought that we wanted to be able to provide content to people that I've spoke to before, or people that know us, because a lot of people today need and are wanting help because they're not getting good advice. That's the problem. So what is this super secret investment that's got smart investors sleeping like a baby? Well, I'm going to unveil that right now, and that investment is it's called the equity indexed annuity. Or it's also called just plain and simply the indexed annuity. Some people call it a fixed indexed annuity, but it's an annuity that's linked to an index. Now, let's lay some groundwork here. The first thing is that what is an annuity? An annuity is it's an investment or a cash account with an insurance company. Now, why would you do that? The reasons that you do that is the insurance company actually gives you in writing guarantees. It's a contract with the insurance company. So that's one thing that I want you to stick a pin in and remember. That's a huge benefit for you, the investor, that you actually have in writing guarantees and protection from somebody with your investments. Now, so the three things I want to give you today in this first installment, just three things, three features in the annuity that benefit you and why they benefit you. So let's start with that. The first thing is market risk protection, MSP, market risk protection. If you're taking notes, make sure you write that down because that's key. And what that does is it basically protects your money from being lost in the market. So we all know that the market's gone down from about 14,000 down to below 7,000. And if your money was in mutual funds or stocks and bonds, you've probably realized a 40 to 50% loss in your account. Okay? Now, in this indexed annuity, had your money been there, you would have had, you know how much your loss would have been? A big fat goose egg. Now, this is my Mac mouse. It's not a goose egg, but it kind of looks like an egg. It's an oval. It's a 0. That's how much you would have lost in your account due to the market going down the way that it did. So market risk protection, that's so important because if we were to back up 2 years ago and said, hey, what should I do with my money? Knowing what we know today, you would have said, let's put it in a safe place where I can't lose any money. So the indexed annuity, again, the first benefit for you is that it has market risk protection. Okay? Now, I have my handy dandy chart here. And what this chart is, see it says fixed indexed annuities. It kind of shows you the market risk protection. So down here in red is stuff that was based on the stock market. Let's just call that a S&P 500 based mutual fund. So what you'll see here, and let's assume that the S&P was at 1,000. Now it's in the neighborhood of 700. So if when the market goes down, your money goes down. And here we're showing that the S&P or index went down by 10%. Then the next year it goes up by 10%. It goes down by 10%, up by 10%, so on and so forth. So when we're talking about market risk protection, look what happens. Let's assume this is $100,000 or so that goes in day one, and this is year one right here. See, that says year, and that says one. And after 1 year, even though the market went down, your money didn't go up, but you didn't lose anything. It stayed flat. So that in and of itself, and any time that you see the market going down in this direction, in this graph, you'll see that your money stayed flat. In other words, you lost no money. So that's the benefit number one. Benefit number two is your interest is credited as a percentage of the market movement. So when you're seeing the market go up, your money, your account with the indexed annuity doesn't go up the same. It actually goes up a little bit less than that. And this is where the company shares in a profit, or look at it the other way, you get to share in a profit. So you take no risk and you share in the profit. And let's say if the market went up, let's say 20% in 1 year, you're not going to get the full 20, you'll get a percentage of that, and it's different based on different companies, but it would be credited to your account. So that's the interest that your account earns is based on percentage of the market movement. So we talked about market risk protection, which is very important. And we've also talked about the interest paid on the percentage of market movement. Now, that's not a typewriter, that's actually the air conditioner acting up over here. Anyway, the third thing is you see these circles, these are blue circles. By the way, in case you're color inclined, like most of us are, we know that red means, that's right, stop. Green means go. So kind of helping you out there just in case the graph's not making sense for you. Now what you'll also see, these circles, what this is huge. It means whatever gains that you get, they get locked in annually. So if your account went up by, let's say, 6% in a year, that 6% got locked in. Where here, even though the account went up, there's nothing to lock it in and it goes down. So if you own mutual funds and things like that, you know that the market goes up, your money goes up. The market goes down, your money goes down. This is huge. Every year, your gains are locked in annually. So those are three huge benefits in the, for the super secret investment that has smart investors sleeping like a baby. Now, the last thing that I want to talk to you about is big also. It's a big number, and big numbers usually have big zeros. So let me show you a number first. I don't know if you can see what that is. Most people at a glance, or if I'm shaking it, you really can't tell what it is, but I can. That number is $7.2 billion from October to December of 2008. This is how much money was investor put into indexed annuities, thanks Caesar, in the fourth quarter of last year, $7.2 billion. Now what I didn't write down there is if you didn't share in any part of that, my question to you would be, why is that? Because here is the bottom line of the first installment, what I want to communicate to you. Our clients that shared in this, their accounts have lost no money. Now most of the people that are coming in that are being referred to us or coming from somebody else, when I meet with them, they've lost 30, 40, 50% of their money in the last year, last 2 years. Our clients, the money that they've had in here, they've lost nothing. Think about it. Imagine the difference of how you would feel if you knew the money that you have that's in here that has lost nothing. That's why smart investors, like our clients, are sleeping like a baby. So, this is taken, by the way, from, I'll tell you where I got this from. I got this from indexannuity.org. It's Jack Marion, and he is an independent third party that rates and talks about indexed annuities. And so that's where I got these numbers from. So if you go to indexannuity.org, you can find this information, all these big numbers. So that brings it into the first installment of the super secret investment that has smart investors sleeping like a baby. Now the next time we're going to talk about a few other in the future installments, a few other really key benefits for you. And I'll give you a hint to one of them. One of them has to do with creditors. Another one has to do with probate. So I'll leave it at that, but there's some really huge and significant advantages of why you want to use that account that are other than just being able to make a little money and having the opportunity. Okay? So again, I'm Mike Allers. Thank you for your time, and I'll see you on the next installment. Thanks.